Good afternoon, everybody. Hope you had a good weekend. It is Monday, August 28th, 2 p.m. Eastern. We had a very uneventful weekend in crypto, as is the norm recently. And we're going to be looking towards things picking up, volume picking up in markets. And generally, we know there's a summer lull. And after Labor Day is when we get things picking up a bit as the summer comes to a conclusion. So make sure and go outside and enjoy the warm weather before it's gone very shortly. I've already got a tree back here that is starting to drop. Not even September. All right. So we're going to be looking at, obviously the burden of proof is on the bulls at this point. And what we have to see is the bulls negate the bear flag that is on the table right now. And they're trying to shape up a daily high or low, but there's a number of things that we need to be keeping an eye on as I keep talking about the broader market, the dollar. We're going to check on those things. We're going to check in on a couple of the altcoins. The bears still have the upper hand. That's very clear, but let's mark things out that would have us take a step back and say things are changing. If nothing changes, we know bears are the way to be looking and downtrends have control. And so right now, Bitcoin, after trading sideways for a few days on the daily chart, we can make a simple statement. This is a daily bear flag. And the only way that this is going to not be a daily bear flag is if we break 26.8 thousand. I prefer the Coinbase chart, but very similar. So if we don't break 26.8, the bears keep complete control. If we do break that level, then we'll zoom out because a weekly bounce will be underway. And we will then be watching for a weekly lower high. But as of right now, we are sideways. And oftentimes what you will see, I think I talked about this in the last live stream, is you will trade sideways while an EMA catches up, whether it's support or resistance. And then you get the followed through move once that happens. And so bulls are hoping that's not the case, because if it is, we're just trading sideways while we wait for the EMA 12 to come into play. And then it leads to another leg down. So that's as simple as it gets. As far as being zoomed in, you know, when we're in this kind of environment where things are sideways pretty much for the last week and a half, I don't really zoom in too much, because if anything, that's just going to lead to me over trading and looking at time frames that are not useful. And if I were going to be zoomed in on Bitcoin, I drew these trend lines here just as a bit of a visual guide. You can hear the thunderstorms coming. We need some rain, so I hope it pours while we're streaming. But I'm watching this potential hourly megaphone. And again, just as a visual guide, I'm not acting on this because the daily time frame is where it's at right now as far as, you know, moves that are worthwhile. And a couple things to note. When you have the weekends the way that they're shaping up recently for crypto, one thing with these indicators like RSI is the more sideways and tight that you trade, the more exaggerated the RSI moves. Meaning, if you're trading sideways, a 1% break can lead to extreme RSIs very quickly. And that's due to how the RSI is calculated. And if you're not trading sideways, you know, a 1% move does not lead to extremes in RSI. The other thing is, you have to remind yourself that things are tight, because you zoom in, and if you're zoomed in, you know, you can see, oh man, the hourly is making a big move, when in reality, it's a 0.4% move. And it's just because things are so tight and so slow that it looks exaggerated. So at the moment, the key for the week, in my opinion, obviously Bitcoin, the levels that we just looked at, our top of the bounce high and our low of consolidation at this point, 25.7. But the NASDAQ and the S&P 500 are forming daily tightening ranges. And how these equilibriums break is going to have significant impact on short-term sentiment in markets. So we had our low, our high of the bounce, our higher low set on Friday, and now we're scouting a lower high to be the result of this bounce. And if we break bearish and get back to the lowest level in, 6+ weeks, that's going to have sentiment go right back to being, bearish, and that's going to have us increase probabilities that the NASDAQ is forming a long-term 3-month tightening range. And if that pattern breaks bullish, weekly bounces will be underway. And I would anticipate that Bitcoin would likely get its weekly bounce going as well if this tightening daily range were to break bull. So well aware that while we're within this daily tightening range in the NASDAQ and S&P 500, things are going to be choppy, things are going to be slower. So essentially just waiting for a break of this tightening daily range, either at the end of this next week, at the end of this week, I should say, or first thing next week. Keeping in mind Monday is a holiday, no trading, so can anticipate crypto's probably going to be a slow weekend. But that's what we're looking at in the broader market here in the short term for sentiment. Again, just, the direction we break this tightening daily range is going to have significant implications on short-term sentiment. The dollar is still strong, and I've stopped watching any trend lines on the dollar. I'm just going to keep it simple and go with daily EMA 12 because we've now held it 4 times on consolidation, and I can either watch the uptrend with price levels or the EMA 12, and on any pullback, we're going to look for a higher low to try and form. We've got a 6-week weekly stair step. We're watching that as well. But the bottom line is the dollar bulls still have full control right now. And again, my statement that I've been saying for weeks is I do not have confidence in Bitcoin or crypto bulls as long as the dollar is up near its high. I have to see dollar weakness shaping up to gain confidence if I'm looking long in crypto. And the crypto stocks, still weak. MARA double topped at the high of Friday. Not doing anything on the daily chart. Riot broke the high of Friday by a couple pennies. Not doing anything on the daily chart. Again, volatility shrinking. We can say, this is the least amount of volatility that Riot has seen over the last week of trading than what we've seen in the last month. So we know that volatility is going to pick up a bit shortly, but the bulls are not proving anything on any of these names. Coin, same deal, still weak, still a daily downtrend. Nothing is changing. So again, this is the boring time of the markets where, a lot of people want crypto to go up a lot more than they want it to go down. There's definitely people shorting out there, which is the direction to be looking when we're in these downtrends. But if you're not looking short, this is the time to be patient and not over trading, not racking up your fees, not racking up your stop outs, just being patient and waiting for something to shift. Because if nothing shifts, the downtrend continues. So some of these altcoins, ETH, just tightening up just like Bitcoin. Again, all I care about are these 2 levels. If neither of these levels are breaking, nothing is changing. We can trade within this range for another few days at least. And the statement for me on Ethereum comparative to Bitcoin is if ETH BTC is not breaking, and again, a lot of this stuff in this live stream that I'm now saying, I've been saying for weeks. And that's an important note, is to be, have the rules. And that helps us, if I won't look long crypto if the dollar is strong. That has helped me to keep, on the right track over the last couple of weeks. Just a quick note before we get into the rest of the altcoins. We got a good bit of things coming up this week. Tomorrow, going to do a public live stream of the stock market open at 9 a.m. Then we've got a webinar with Lori, myself, and Lamont talking about bag holding, which certainly applies to all markets. And it's something we all experience. So that's going to be more of a fireside chat kind of thing with no fire between the 3 of us, talking about our experiences bag holding, the lessons that we can learn, and taking some Q&A at the end, because that's definitely one of the biggest challenges that anybody in markets faces, is learning those lessons. And then on Thursday, Lamont's going to do an AMA, one of the less frequently public video posters here as a part of the Chart Guys team. But for those of you looking to, if you're into volume profile, check out Lamont, and he will answer all your questions. So we'll have links for those on our social media. They'll be here on YouTube. So back into crypto. Simple statement. Simple statements are your friends. Trading is hard. We make it harder. We overcomplicate things. If ETH BTC is not breaking this quadruple top, then Bitcoin is stronger than Ethereum. If Ethereum gets over this level, that opens the door for me to say, okay, maybe I do want to look at ETH over Bitcoin if I'm looking long. Have to keep in mind, this can possibly break bullish while crypto is all dropping if Bitcoin is dropping faster. But again, just a simple statement. I have no interest looking long ETH if this level is resistance. And so now we just have a standard old daily equilibrium tightening up here as well, and looking for a break of that sometime in the next couple of days. Been keeping an eye on OP. Again, hindsight at this point, but lead bull, still giving significant bear opportunity. Daily stair-step pattern. And let's just look at the two styles of making this bear entry. And it was the head and shoulders that was shaping up a week ago. I guess less than a week ago. Half a week ago. That marked the top. And the two ways that you enter on this pattern, there's one that has more risk and more reward, which is when you short the right shoulder, because what you're doing is you're shorting into short-term momentum, you're placing your stop over the high, and there's more risk because you have a higher probability of stopping out. So there's a higher risk of stopping out, not necessarily, the loss that you would take would be higher risk. So a higher risk of stopping out, and the reward is more significant because if you're right, you have a better entry. The other entry is once it confirms. If I'm shorting on a support break, I'm taking profit quicker because where's my stop? My stop's up over 159. That's far away. Last thing I would want to see is a bear break, no follow through, and then we recover and it stops me out. So if I'm entering up here, I'm comfortable. I exit partial into the support. I'm in full control of the trade. I much prefer to enter on that kind of move. But you can still do it the other way. You just have to be a little bit quicker with the profit taking so that your break even, rather than your break even being down here, if you then take half profit on the initial move down, now your break even's up here. You got a little bit more cushion to work with. And just an example, Nvidia here on the 2-minute time frame just gave an example. So Nvidia ran up 5-minute stair step up. And if I'm looking short, I want to see a pullback to then look for the lower high. And so here on the 2-minute time frame, this was the most significant 2-minute period of consolidation, this entire move up. And so a bear then says, all right, that's my one attempt. I'm going to try for the lower high there. We just created the most space for the 2-minute lower high to potentially form versus any point in the last hour. And so I personally would much rather make that bearish entry stop over the high versus the 2-minute head and shoulders confirming. Both work out. Again, it's just a different trade setup, different risk reward profiles for that trade. And so now here's a bear looking for a 5-minute lower high on this bounce, knowing that there's space for it to be created compared to the high of the day. So OP, where do we stand now? All right, hindsight, 4-hour head and shoulders into daily consolidation. At this point, significant follow through. No reason for bears. Again, I always want to put ourselves in the mindset of what is a bull thinking with this chart and what is a bear thinking with this chart. A bull is looking for a daily high or low. Making note that we have retraced at this point over 50%. So an equilibrium now becomes the most likely scenario, meaning we're going to look for a higher low, then we're going to look for a lower high and a tightening range, just like the broader market is giving us because it had significant volatility in both directions. Lost my train of thought. But if I'm a bear, so if I'm a bull, I'm looking for a daily high or low. What do we need for a daily high or low to shape up? We need a 4-hour trend change to shape up. So I keep an eye out for a bullish pattern on the 4-hour time frame. Right now I can see the 4-hour EMA 12 has been rejecting the price for days. So I can make a simple statement. We are not going to set a daily high or low if 4-hour EMA 12 is resistance. We must get over that as step 1 to try and shape up a daily high or low. If I'm bearish, if I have a bear mindset on this chart, I have no reason to take any profit. Let's say that 4-hour head and shoulders, I take some initial profit on that move down and I leave a runner. Well, we're just in a daily stair-step pattern. Every single day is a lower high the last 5 days. I have no reason to exit my runner bear position. The first reason would be getting over 4-hour EMA 12 because I would look at that and say, okay, that's the first change on this chart. That's the first time this chart is showing me something different in the last 4 days. So maybe I want to lock in the remainder then. Or maybe I just simplify it and just say, if we keep setting a daily lower high every day, I'm not going to cover. And then once that pattern breaks, I'll exit the rest of this short. So if those things have to happen, again, I can be looking long, but I know what a bear is thinking on this chart. And that comes with experience, obviously. Once you short 5,000 times and long 5,000 times, you have a better idea of, what traders are looking at in both setups. But I always like doing that just to ensure that I'm looking at both sides of the equation and not getting too biased in one standpoint. So stair step up, now a stair step down. Equilibrium is the most likely scenario, but no sign of that daily higher low taking shape just yet. XLM and XRP are getting very tight. I'm treating this as an equilibrium. XLM, lower high on the daily, higher low, lower high. Bulls must hold 11.6, 11.68 for a daily higher low to form here. If it does, we're then going to look for it to continue tightening. We'll look for a bounce. We'll look for a lower high compared to 12.9 and for it to continue tightening into the end of the week. But the burden is on bulls to hold this support and shape up a 4-hour trend change. And again, same thing. 4-hour EMA 12 resistance for days. We're not going to set a daily high or low unless this pattern breaks bull. Could this be a falling wedge? It's possible. If this is a 4-hour falling wedge that breaks bull, the daily high or low will be taking shape. And we're also watching for a weekly high or low, but there's no sign of it. We need that daily to shape up. XRP, sideways on the daily. Same thing, trading very similarly. Low, high of the bounce, higher low, lower high, higher low, just held. So we just held support by a fraction of a penny. Bulls need to confirm a 4-hour uptrend for us to be looking back at resistance. What these charts tell me on XLM and XRP is volatility is coming within the next couple of days. We're not going to trade within this range sideways that much longer. So that tells us, can I say which direction we're going to break? No, but I can have, a bear bias because of the prevailing downtrend. But even, just as useful as trying to determine which direction it's going to break is knowing that the break is coming. And that allows us to say, okay, pay extra attention, establish a trade game plan, set your alerts on your phone or on TradingView or on Trader Pro or whatever it is. Because we know sometime in the near term, this break is going to take place. We're going to see a volume and volatility spike. And that means trading opportunity. So I can say that sometime in the next few days, XLM and XRP will give more trading opportunity than we've seen in the last week. And we just patiently wait for the break in the meantime. Running down the altcoin list here real quick. Nothing else really stands out. A couple of the meme coins getting a little pop today. Nothing really too significant. Trying to get a daily bounce going. But is that changing anything on the daily chart for Ape? Not at this point. SHIB's an equilibrium worth watching. Again, same thing, just tightening range. Eventually will lead to that break. I would just be viewing it like this. Higher low is set. Bulls would have to break 854 for a bull break here. But again, just a week and a half plus of sideways tightening that is shaping up. And I wouldn't be surprised if these sideways tightening ranges in these crypto coins are going to align with a break when the daily charts that we just looked at on the NASDAQ break. We can bounce and set a lower high today or tomorrow, pull back and form a higher low for a day. Next thing you know, it's Wednesday, Thursday, towards the end of the week, and we're looking for a break of the daily range at that point. And that may align with a lot of these tight sideways crypto ranges. All right, I'm reading the chat room. I've got a live stream here in the afternoon for stocks. What's up, Andre? And more, and Josh. Any Labor Day promotions? No. No Labor Day promotions. Let's see. Next promo. Nothing coming up in the near term. We certainly have the holiday promos in a couple of months, closer to the end of the year. Thanks, Mag, for the thumbs ups. Doge. Haven't looked at Doge in a while. So Doge has the same sideways range. And at this point, we could call it a bull break with no follow through, where we topped out on the bounce. Technically, that's a daily uptrend, but it's a daily uptrend with zero follow through. Short-term support, we're looking down at 6169, and we got to break the bounce high. Otherwise, bears remain confident as the daily EMA 12 resistance drops down into play. If we break bull, we know to zoom out and scout a weekly lower high. And at that point, we would have a weekly tightening range. So again, if I'm looking for these sideways ranges to break bull, we've got to see the dollar weaken. We've got to see the dollar start to lose daily EMA 12, which again is not close to happening. So that's what we're watching the next few days if we're going to gain confidence that these names can break bullish from their sideways daily ranges to bounce on the weekly. And what the bears have in their favor is longer term trends, knowing, yeah, Doge can break bull on the daily, but then we're just looking for a weekly lower high. So again, it determines what time frame is most important to you, but bears aren't worried about much on weekly time frames right now. Not going to look at Tesla because that's a stock. This is a crypto stream. Definitely interested in, I have a Tesla swing position from last week. But Tesla is relative weakness today. Caspa USDT. I'll talk about Tesla in the end of the day market video after close. So weekly consolidation underway. We're trying to set a weekly high or low. The daily trend has to change back to the bulls, and we have no indication of that shaping up. It would take a while. We have a daily stair-step drop, lower high every day, 7 days. We need to bounce for multiple days. We need to confirm a daily uptrend for a weekly high or low to shape up. The size of this retracement is a red flag because we now have space for a weekly lower high, and then the bears are going to try and confirm a weekly downtrend. So we saw lead bull action, and we are now fading to lead bear. Were there any red flags on the BTC pairing? I guess it's only been trading for a few days, or a couple weeks, I should say. So that's not helpful. We just topped out. Bulls just ran out of momentum. The weekly stair step broke bearish with the inside bar bear break at 4-1. We then followed through fairly significantly from that point. 18% drop from there. So again, you just got to be cautious that that's the top for the next however many months. And we're not going to have confidence saying that unless we confirm a weekly downtrend. So you can be keeping an eye out for a weekly high or low in the short term. Just don't forget, with where we've pulled back to right now, we can bounce 25% and just be looking for a weekly lower high. So daily downtrend is our current guide, and the daily stair step is our current short-term guide. Sol. So Sol's very similar to Bitcoin in the sense that we've got these two levels. We got the low, the high of the bounce. Bulls are trying for a higher low, but the simple statement is if we're not breaking 22, nothing is changing. The bears stay confident in the short term. They have no reason to not be confident if we're not getting over this $22 resistance zone. We topped out initially on the bounce. We topped out again. So 22 is key in the short term. Bigger picture, monthly consolidation, not underway. 2-week time frame. Again, this is the kind of name where, yeah, I'm going to look for a 2-week high or low compared to 1280. I have no interest looking long in crypto right now, so I'm not looking in terms of grabbing a position, but watching for it to tighten up. But just reminding myself that it's entirely possible that Sol just does something like this for the next 2 months. And so one thing that we get with low summer volume, with bearish control, is it takes a really long time for bulls to regain momentum on these longer term time frames. So, simple statement, if 22 is resistance, bulls don't prove a thing. Support is down at 20 and 1935. Do I think anything of the Bitcoin RSI being low for a few days now? I do not. It's just cool. The sideways trading is allowing Bitcoin's RSI to cool off. I mean, Bitcoin was really beat up down in the teens, and now here we are trading pretty much where we were when the RSI was in the teens, yet the RSI is now 28, hardly oversold. And again, this has to do with lack of volume in the summer, sideways trading ranges, but RSI, keep in mind, RSI not very useful to us unless it is with the prolonged trend. Meaning, you know, if we're in a monthly, weekly, daily uptrend, and then we shift into daily oversold conditions, we look for that to try and mark a monthly high or low. And that is still possible. You know, if we hold 24/7, it is a monthly high or low trying to form. We don't have a lot of confidence in that at the moment, but it is a possibility. And so that's one of the reasons, I guess I have to talk about Tesla. One of the reasons I went long Tesla on this gap down open was first daily oversold conditions after we just ran 100%. First daily oversold conditions, and the monthly can set a monthly high or low. So my entry was for the possibility that daily oversold is going to mark a monthly high or low. And it did back here. This was daily oversold. It marked a monthly high or low, and we ran 100%. So the daily RSI oversold meant a lot for me in Tesla because we were in a monthly, weekly, daily uptrend, and then we hit daily oversold. Bitcoin, you could say the same thing. Yes, we were in a monthly, weekly, daily uptrend, but a much weaker one. The biggest difference is, you know, this bull break was zero follow through, showing a rising wedge and tired bulls. So long story short, the daily RSI doesn't mean anything to me on Bitcoin right now. It did back then, you know, certainly not looking bearish when the daily RSI is in the teens. We are looking for an oversold bounce. We got a weak one, and that has now allowed for the RSI to cool off significantly. All right, last one, near BTC. Near BTC daily falling wedge. I like it more condensed on the weekly. The one thing I don't like, remember with wedges, this is a lesson for everything. With wedges, they have high probability. Think of how many times we see Bitcoin with a rising wedge in a bull market that breaks bull. So the lesson with wedges is they have way higher probability when the most likely scenario on the longer term time frame aligns with the wedge. Meaning, if near BTC was looking for a monthly high or low, then a daily falling wedge means a lot to me. Because a daily falling wedge can shape up the monthly high or low. It's not. We don't have a scenario where a longer... Doesn't mean we can't bounce. Again, I'm just talking probabilities and confidence in a pattern. And so I don't have the confidence. I mean, Litecoin, LTC, BTC was in a falling wedge for 2 years that just kept falling. So just remind yourself that. Here's an example again from the stock world. QQQ today. So I head into the morning for QQQ looking for hourly consolidation because we went straight up off the low of Friday. We got the hourly consolidation. What's the most likely scenario? An hourly higher low. So I know an hourly higher low on QQQ is the most likely scenario. That's my premise. And then I watch the short-term trading today. And what do I see shaping up? A 5-minute falling wedge. Why do I pay attention to that falling wedge? Because that aligns with the most likely scenario of an hourly higher low forming. And look at that move. Falling wedge bull breaks bull, the hourly higher low, the most likely scenario is set. Because we can have more confidence in wedges when they align with the longer term most likely scenario. The trend. I mean, the trend has to align longer term. So yes, near BTC could be a falling wedge, but I don't have high conviction or confidence in it because we're not in a scenario where a longer term time frame is looking for a longer term high or low. If QQQ was in a daily and an hourly downtrend and it gave me this 5-minute falling wedge, I make note of it, but I have no confidence in it. That's the best takeaway of this live stream. 2 takeaways. Number 1, clear statements. If we're not over this level, bulls don't prove a thing. If the dollar is not consolidating, crypto bulls don't have confidence. If the dollar doesn't lose the daily uptrend. And the second takeaway, wedges need to align with the most likely scenario on the longer term time frame to have high probability. I use linear scale, not log. I think. Yes. All right. Appreciate you all tuning in. Again, it's boring. Things will pick up again. There'll be excitement. There'll be partying someday, but it's not now. And so we got to remain patient. We can be putting in time and effort for learning technical analysis, getting better with trading, getting more prepared for the next time things shift. But for now, patience and not over trading. Keeping it real, this is the least I have traded crypto in the last 6 years. 2023, easily the least dollar volume, the least amount of trades. If I could short, that would probably be different. But again, in the US, our hands are tied. Thanks for tuning in. Appreciate the likes and the support during the slow times. And don't forget to do good things.